Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at Well Shield. It's an outsourced CIO and investment research company. Nick Fusco, CEO of PM Insights, a pre-IPO stock secondary market pricing company. And Evan Cohen, founder, Chief Investment Officer, or Operating Officer, of WithVincent.com, a media company focused on alternative investments. Gentlemen, we got three bangers today, right? Let's kick it off with the DeepSeek is all the rage. Nick, you just looked at the markets. Where are we at? We're doing this on Monday, the 27th, almost an hour before close. Where are we at?
Sure thing. So S&P 500 down 1.75, NASDAQ down 3.5.
Oh.
And NVIDIA is down just over 17% before the close.
All right. So what's DeepSeek, right? So this is, I'll do the quick little intro thing and then we can get into it. So DeepSeek's this AI large language model company out of China. It's an open source shop. They have just released a model that smart people are saying is comparable to ChatGPT 4.0. But here's the racket. They're claiming that it only cost $5.5 million to train this model, which obviously OpenAI cost them like billions of dollars to do that, right? There's some open discussion about how many GPUs they had. Some are saying that they had like 2,000 GPUs, just north of 2,000. Other people are saying they had 50,000 GPUs, right? Obviously, there's some regulatory stuff about GPU access in mainland China that the government's doing. So I think that number's kind of maybe not all out there. But probably more importantly, like, what do you guys think about this, right? Like, Nick, maybe we'll start with you. Like, what do you think about this DeepSeek thing? You know, how is it going to impact kind of this is a pre-IPO stock podcast, right? So how do you think it impacts pre-IPO stocks? Like,
Sure.
what are your thoughts on this stuff?
Sure. So, one of the big things we talked about probably in December, November was the cost of compute and the power of compute is power is going up, cost is going down. But then when you look at something like this is like pennies on the dollar, right? And it's really changed how much it costs to train up the model that's going to be useful. The approach to the model not being dense, but being a mixture of experts is really reducing kind of why this costs anything. And we can go into what that's all about. But if we're able to reduce the cost, and I know we talked about this back in November, that maybe you don't need all the most powerful model to do some of these more simplistic computations and things like that. That will be very transformative. They just completely came out with a baseball bat and shattered the concept of what more affordable could possibly be.
Right.
And I think it's kind of the similar playbook of, these are all, whether you're making the baseball bat itself and you're doing that, you're building a Louisville Slugger in the US, or you're going to have a Chinese company build that same or similar baseball bat. Hey, it's always going to be cheaper out of a more competitive country. And that's what I think we're in for here.
Right.
So I don't know what side of the fence you guys are on, but I think it's a pretty good thing. The market's not responding positively, but it's good to bring that cost down.
Okay, so I'm going to immediately go to Evan because I know he's going to love this question. What do you actually believe that this is real? Like, there's people out there talking like this whole DeepSeek thing is in fact not $5.5 million training the whole thing. Like, what do you think, man?
I love how you think that this is the question that gets me excited. You know me so well. Look, I've spent some time just trying to decide how I feel about it. Obviously, there's an incentive for the CCP to make it feel like, hey, it's all the sanctions that you put on us. And just for the listeners, is like, so the government, like, there's a sanctions against the ability for mainland China to have access to these GPUs, this technology. Right. So technically, they're not supposed to have access to H100s or even the next generation, the Blackwells that NVIDIA is working on. And so I think that there's absolutely some incentive for the Chinese government to say, hey, look we don't care about your sanctions. We still were able to succeed anyways. And now there's all these rumors where apparently they have access to 50,000 H100s. And, I think about the incentive there, and I was like, it makes a little sense. That narrative makes sense. But at the same time, we've spent a lot of time talking on this podcast about, we expected this to go down. We expected the cost of compute. We expected the cost of these models.
Not this fast, right?
Not this fast.
This is fast.
But yeah, it's fast, but it's not totally unexpected. And so therefore, like if you combine, I think there's a little bit of both. There's certainly probably some elements where the startup was able to get access to some compute resources and some dollars to train the model. They probably did it for way less than we would be used to spending, which I think is just the glut of our technology industry, just putting money into this and, paying people millions of dollars when they probably don't deserve it to build these models out. But one way or another, I think it's exactly where we need to be, which is like making a competitive market that brings the costs of all these things down and expands access to these amazing technologies.
Such an American statement. That's such an American statement.
Well, I would say the American statement is the opposite, but okay.
Well, no, like it's a competitive market. Let's get out and compete. I love that. All right, so Clint, clean it up, man. You're like, we're investors on this call. I mean, like, look, if like assuming this is real, how do you feel about XAI? How do you feel about OpenAI? Like,
we talked.
Is it infrastructure? Yeah, I mean, what do you think?
Yeah, I mean, we've talked about this a lot, right? I mean, you've got to approach it from a geopolitical angle too. I think Evan pointed that out. At the end of the day, we've been in a Cold War with China for quite some time. This reminds me of the race to the moon, right? So at the end of the day, we are in a new arms race, and that race is compute and technology. We've had a lot of drops out of China recently, whether it be the artificial sun they created and fusion reactions to DeepSeek and AI. At the end of the day, technological advancements are extremely deflationary, and that means what ends up happening in a self-fulfilling cycle is the disruptors get disrupted. And if this is real, that's what you're witnessing, but you're witnessing it within regards to training models. We've talked about on this podcast for several months the transition to inference and how important that's going to be.
Right.
And I think, ultimately this probably, and I think what's happening in the market today is just a shifting of expectations from a CapEx perspective. Ultimately, this is all beneficial. This might not be beneficial to the stock price of NVIDIA today because the expectations were for this kind of exponential continued increase in CapEx expenditure. But this is ultimately beneficial for the scaling of AI. And when you think about all of that, I always go down the rabbit hole. What are the best investments? The best investments aren't these language models, or these learning models. The best investments are the infrastructure required to continue to scale and move forward. So that would be things like electricity, raw materials, data centers, even energy resources next to data centers like natural gas providers. Nuclear eventually if we get deregulation. So there's so many ways to play this. And all this tells me is that countries are going to spend an enormous sum of money to scale AI because this is the new arms race. And I think the U.S., and I put it on X after the news dropped over the weekend, I said the U.S. is going to spend trillions on AI and AI infrastructure. There's just no other way around it. It's not going to be billions. It's going to be trillions. And it's an important race. And obviously with China launching this, and launching some of the other technological drops, I think they're showing the importance of it to them as well. So yeah, I think we're on a wave, and it's going to be amazing. How you play that again is going to be the challenging part.
Right. Well, I will say this. I think I continue to hear about people implementing these AI models right into their business. Because I would say, like, look, whether it's OpenAI, XAI, DeepSeek, anybody else, right? Llama, right? Whatever it is, it's the implementation that seems to really be paramount right now. So everyone, last year was the year of like, is this AI? I think at the beginning of the year, everyone was like, is AI real? And then I think quickly everyone was like, yeah, it is, right? And now it's like, all right, how am I going to implement it into my business? And everyone was doing tests all through 2024. But now 2025, I feel like is the year of like, all right, well, we got to deliver value now, right? And I still talk to I talked to a business owner the other day. Well, he's not a business owner, but a guy who works at a big company, and he was like responsible for the broker dealer. And he was telling me, he's like, I've talked with OpenAI, and like, I can't get them to tell me how I should use this in my business. Right. So like, there was like a disconnect between, they're like, well, just hit the APIs. And it's like, but I don't want to hire 15 developers to like figure this out. Like, just give me a solution and I'll implement that. Right. So that's like an app. And I know I've been talking about like, when are the apps going to come? And they haven't come yet, because I don't think the large language providers have kind of like decided where they're going to stop and where apps can pick up. But that seems to start to be forming out in the marketplace. Like, So that, to me, whether it's a Chinese model, so what's my point? Whether it's a Chinese model, whether it's a US model, whether it's open source or closed source, it seems like where the area of opportunity, at least to me, what I keep hearing in the marketplace is like, who's going to implement, who's going to develop the solution to implement, right? This AI into people's businesses. And those companies stand to make a lot of money, right? And just in the last couple of weeks, like Harvey just did a round. There were a couple, Harvey's the what I would call an app for legal law firms, right? Where it's like you can basically create like an associate LLM, right? But it's all dialed in on your own proprietary data and everything else. That's like an application, I think. So that to me, I think is where, like, Clint, so to your point, like infrastructure is an obvious one. That's like a slam dunk, right? I do think though that we're going to start to have this emerging layer of apps where people can like start to dial in. And Evan, you and I talked like last week about using a model, like filtering to a specific AI model for a particular task, right?
The routing.
Yeah, the routing. Like I think that's going to start to play out. Like I think as investors, we're about to have a slew of these AI apps that are going to hit the market. And some of those will be incumbent and some of them will be new people. But I think there's like a really big investment opportunity in those emerging companies.
The nice point on that is, this is the dovetail from what you're saying, Aaron. Did DeepSeek exist 2 years ago? Because I went in the Wayback Machine and I wasn't really finding a whole lot way back, and it looked like they just dropped all the news on the website within the last couple weeks, because it was there last week. And then I think the cost thing is the one that drives it home for me. What would have taken, let's say, a big institution $1 million now might cost like 10 grand,
right,
50 grand.
So I just don't know. I got to be honest, guys. I've done a lot of stuff with China. I just don't know if I like believe these numbers. I got to be honest.
Well, the main reason why I think it is different is because, computationally, it's not going to use as many parameters at the same time.
Fair.
And that's where it's kind of like if you run a company. This is a really bad analogy. You run a company of 100 people, and then 10% of them are in math, 10% are in English, 10% are in French, and you have to ask some trivia about what's the capital of France. You're not going to ask the math people. You're not going to ask the English people. You're going to ask that small 10% on the side that you're your French enclave. So in this case, it'd be Evan, right? We'd ask Evan about the French question, and that's it. And it's faster, and the amount of compute it took to get there was just going to be so much less.
Fraction. Right.
Yeah, in terms of cost.
But just
now, I guess it's it's going to be a much wider net and not necessarily as deep. So maybe some of the complexities, you're not going to go deeper and deeper and dig like you could with an OpenAI model.
Yeah.
But to get 95% of what you want, it's kind of
fraction of the cost
built for that, right?
Yeah.
So that's why I think this is real news. I don't think this fake information that's being put out there. No.
Okay, fair. What do you think, Evan?
Yeah, well, I totally agree. I think the structural way that the prompt engineering works with this new model is going to change the way that model design works, and getting answers and using compute. It's just getting optimized, which again, we always thought that it was going to be that way. But
right.
I want to totally double click on what Clint said, because I still believe that there's multi-trillion dollars worth of investment available. We said it before, like at the end of the day, if the compute drops and continues to drop in cost, it just means that we're going to use AI for more different applications.
Agreed.
Right?
Totally.
There's no limit,
Agreed.
right? Like we're saying, like, if compute was expensive, we'd be putting it all toward, cancer solutions. When compute's cheap, we're going to have it like, draft our emails to our landlord, all those different things. So there's just an endless opportunity, in my opinion, of ways that you can use AI. And if the cost of compute just continues to drop and the cost of inference continues to drop, we're just going to use it for more and more applications.
Fair
The other thing I would love to get your 3 opinions on is where NVIDIA stands today on this, because there's a world where DeepSeek supposedly they train this model in H100s, and H100s are an exceptional machine. I believe that they were used to train parts of Grok. They were used to train all of OpenAI's models. All the foundational models today have basically been used H100s. But the next generation chips, the Blackwell chips, are supposed to be substantially more efficient in compute and energy for AI. And so that's a moat that many in the technology and in the investment side have said that's a very defensible moat. It's not so easy for someone to come and build that technology, the IP that NVIDIA really has. And so when the market sells off 20% a day and we just sat there and said there's trillions of dollars worth of opportunity, we're just going to expand the market here. I think that NVIDIA, this is potentially an opportunity for people to get in, because, this is just like fear investing and momentum investing. And I think there's I don't think that China can replicate the IP that NVIDIA has at the moment.
That's fair.
Let's talk about NVIDIA I think there's a difference between the business and the stock. So the business, for sure, has sustainable moat for quite some time, right? And a lot of times this is just about the persistence of that moat. There's nothing on the foreseeable horizon that's going to replace NVIDIA from a scaling AI perspective, right? I think everything else, even Grok, when you consider those chips from a inference perspective, these are just additions, right? So I don't see anything really replacing NVIDIA as a business. I think the challenge, I think what you're seeing today is that shift in expectations. Remember, in the dot-com bubble, Cisco just missed earnings by a penny. They didn't lose money in the quarter. They missed earnings by a penny, and it completely shifted the stock performance over the course of the next 10 years. And so I think there's a difference between the stock and the company. I think the company is on solid footing. The stock is anybody's guess. What's going to happen to that going forward. And so I think the reason why I'm saying that is because I think it's really important to pay attention to shifting perspectives as it relates to the stock market and market prices. And I think that's what we may be witnessing here. We may not, right? We're only going to be able to know that in hindsight. But I think that's something that's an important delineation.
Well, look, Clint, I think you mentioned inference too earlier, right? If training, so this whole thing with DeepSeek is about training, right? Exactly. So if the training gets dropped dramatically, you're still going to need inference to run these things. And I think what we're seeing with operator and computer use and all this, this is all inference. So if anything, this is an acceleration to where I think we've all been talking about, of the total amount of compute that will get used in the future, 10, 15, 20 years from now, it's going to be primarily inference with a smaller portion going to training, right? So, there's going to be, so we'll talk about this more later, the data center thing, right? So maybe we can reserve it for that. But okay, let's shift focus. Let's talk about data centers later, because we're going to talk about inference and training, all that with that. So crypto. So Clint, I want to know, you and I talk crypto sometimes, right? This seems to be back now that Trump's president. He signed the executive order. Crypto has outside of Bitcoin, like the individual coins, right? But in pre-IPO stock land, I hear nobody talking about these pre-IPO stock crypto related companies, right? Do you think we're going to see kind of a resurgence in just the crypto ecosystem? Or is there going to be, who's going to be the winner? What do you think, man? What do you think?
In all fairness, I'm invested in 6-man ventures. And that's been a great play for us from a venture capital perspective. They have just completely dominated. So we haven't, ultimately, I see from that lens is the infrastructure not infrastructure, but the environment continued to expand. There is a tremendous amount of brain drain going to crypto. Crypto is not slowing down. It's continuing to develop and shift and iterate. And I believe it's just part of one of those 3 mega trends that's going to shape our investment reality over the next 10 to 20 years, probably a couple decades, right? And that's deglobalization, number one. So all the onshoring, what we're seeing, this kind of race, race to who's going to dominate AI, who's going to dominate crypto, right? Yeah. All of that is, how are those supply chains going to look going forward? That's one mega trend we're witnessing currently is going to shape investment opportunity. And that's why I like infrastructure long term. Number 2 is decentralization. You cannot unsee it. Everything is moving down to the power of data, and the power of the individual. And it's going to continue that direction. And it started a long time ago, moving away from centralized control of everything. And it's continued to decentralize since then. I think we're going to witness that for the next, couple of decades. And I think crypto stands to benefit from that. And companies that are focused on crypto stand to benefit on that. And I think tokenization is a real thing. We've heard BlackRock talking about that.
Yes.
I think that's kind of the next wave. And I think it's going to shift and change the way we invest in everything.
Right.
And so that's the second wave. And the third wave is this fiscal dominance trend. And that's the fact that we've got the money printer And
Right.
we're going to continue to print, and it just depends on how it gets deployed. But we're going to continue to print because it's important for us in terms of maintaining dominance. So I think those are the three megatrends that are shifting, and I think crypto benefits from all three.
Okay, so I agree. I totally agree that I think this is now a real investment opportunity. This is the thing though. The two things that I'm hearing people talk about in this space are one, payments, right? So like specifically like all like people,
Stablecoins.
crypto people, yeah, like crypto people who I hear talking about, they're like going after Visa, MasterCard, and Swift, like wires, like and ACH.
Well, there's Ripple,
Like,
right?
Ripple.
Private company right there.
They're on another side of it being like, well, no, we don't want the government to do that. Like we're doing that. So everyone just use our stuff. I'm hearing some of that stuff too, right?
Blockchain enabled. Right.
Yeah. And then the other thing is what Clint just mentioned, like Larry Fink's now out there pounding the table, like every stock and bond should be, digitized and tokenized and be on the blockchain. Right. So I guess my question, if I could, like, if we focus on those two things, like payments and tokenization of securities, right? Which, I mean, in theory, that's like, so tokenization of securities, in my opinion, is like going after the DTCC. That's
Correct.
what that is, right?
But widen it to assets, not just securities.
Okay, so but to that point, then Clint, though, but didn't you think you would start like how would you start? Like, I'm thinking about, I want to put dollars at risk here and invest into something. So like, where does it start? Like, how does the sausage get made? Like for me, it's like if you're going to tokenize this thing, is an incumbent going to do it? Like, is the New York Stock Exchange going to be like, we're in, or NASDAQ Stock Exchange be like, done, I'll tokenize all this stuff and put it on the blockchain? Or is it like some incumbent show, like Coinbase does it? Right.
Good question. I don't know. I'd love to hear Evan or Nick's thought on it.
Yeah. The one thing I'm always having in the back of my mind is I think you are going to have the players that are not going to get negatively affected, and maybe NASDAQ and NYSE want to get involved as to protect what they already have.
Yeah.
But when you hear like Fink and Citadel talking about like how can we do something more tokenized in a new exchange sort of format down in Texas, that really piques my interest. When you're thinking about new ways that the market could just get completely disrupted, I think it's going to be those sorts of players that are not your. I mean, you're not going to completely flip your existing business model on its head, and if you're going to decentralize a lot of that, that's really a negative for NYSE and NASDAQ, right? So,
yeah, but that's a good point, though, Nick. Like the big players would get together and decide, like, hey, we're going to start this new thing, like they did in Texas, and that's going to be the big winner because we're going to send all the order flow through that exchange that we all started, right?
That seems but will it feel like an exchange? I mean, because the people that may want to get behind that might not want it to feel like an original exchange.
Yeah,
it's not. We don't want a NYSE 2.0.
Fair enough, but also too, like to be clear, like a lot of, and some people may not know this, but most of these transactions now don't even happen on exchange anymore, right? They're all OTC. A lot of these black pools and everything else, dark pools that are out there. So, I mean, Evan, what do you think? Like payment? What are your thoughts on payments? I know you're a payments guy. Like, do you see all payments going to just like stablecoin and Visa, MasterCard are gone, or like, what do you think?
So I think that a lot of the hype around tokenization of all different types of assets and stablecoins, et cetera, is a lot of it. There's a lot of hype. I think there's some promise, but I think some of that promise is overstated. I think stablecoins are a very interesting technology. I love the idea of like instant, cheap remittance, especially on like high transaction volume chains like Solana. It's amazing. It's a great experience. I don't necessarily think that it makes it much cheaper. I think that a lot of people look at the tax of Visa and MasterCard and credit cards, but those are totally different businesses. There's lending and credit involved. It's not the same. There's chargebacks. There's a whole different sense. There's a whole different business line. And I don't think stablecoins solve that problem. They might solve the like, hey, wirehouse remittance between two large institutions and over the weekend. Like that's great, sure. But I don't know if that's like a massive problem also that like institutions are facing. I believe that the digitization of payment technology needs to happen. And maybe blockchain is a way to do that. I don't even know if it has to be decentralized. I think like a centralized US dollar probably could be perfectly great. Circle clearly has done a good job with USDC, and I don't think anyone here is complaining that, you know, the centralized organization has access to the dollars for redemption. On the other side, like there's Tether, which is, you know, doing exceptionally well and, you know, doesn't have a lot of trust in, you know, backing from the, you know, transparency perspective, but people still use it. And it's probably used primarily for money laundering and crypto trading internationally, et cetera, et cetera. So I think that the idea that like crypto stable coins are going to change the way and make, you know, credit card fees go to zero, like I just don't see that. I just think that that's people not understanding the business model of how those like businesses work. I've spent a lot of time in part of my early career doing the securities tokenization. In fact, like in 2017, I think I told this to Nick and Clint. I did the first ever security token real estate offering. I helped organize and launch. We sold over $20 million of the Aspen St. Regis Hotel on Ethereum and in a public Reg A offering, regulated and offered by the SEC, full disclosure, et cetera. And, you know, while it was really exciting and interesting to bring a real physical asset on chain, it was really hard to raise the funds because we had to charge a premium for the shares because there was a technology cost. Hey, like we spent a lot of money on this offering. Hey, we're using this like wallet technology. We had to get this vendor. We have to get this legal contract taken care of. And it ended up making the cost of the sale higher than if we had just done it with just, you know, pen and paper, the classic way. And you know what the real estate investors and the institutional funds that we talked to said? They're like, I'm not going to pay a premium just because you've digitized this asset because the asset sits in my portfolio. I never think about it. It's just like the same thing with NFTs when people were like, oh, should I invest in art and like, you know, artworks on the blockchain like NFTs? And I was like, well, you shouldn't buy a piece of art because of the technology that it's underwritten. Just like you shouldn't buy a painting because it's painted on, you know, it's painted on paper or on canvas versus like on cement. Like you buy the art for what it is. And so I think that there's a lot of people thinking that if you digitize, tokenize these securities, it's going to create more liquidity, more accessibility, more free trading. But like at the end of the day, like what we really need is a centralized transfer agent, like the ability for these secondary stocks to have a ledger where I could say who actually owns SpaceX, who actually owns these private securities. But I don't know if it really is if it's going to make anything less expensive. And I don't think that there's a lot of investors out there that want to pay a premium for a technology over the cost. And so it just creates this narrative where it sounds great in theory, but in principle, there's a lot more challenges to the implementation of it that people think about.
Well, I mean, so brokerage firms, I mean, you have no commission, you know, stock and ETF trades, right? I mean, maybe there's something to do on fixed income, but it's hard. I think from a consumer perspective, it's tough to do that. I got to tell you, I think if I'm MasterCard or Visa, I'm like shaking in my boots right now over this payment stuff. Like this to me, and I don't, so like, I think like if you look at what Brazil's doing with Pix, they're like instant exchange stuff. I mean, like payment stuff, tap to pay kind of thing. It's like more than all their debit card and credit card transactions. So I can see, and probably more importantly, I'm hearing stuff come out of the government like, oh, there's interchange is like, you know, 2 to 4% like tax on every transaction. And if we get rid of that, it's trillions of dollars that unlocks in GDP, right? I mean, like those are the statements that are being made, right?
But let's be clear though. It's like, it's actually only 10 or 15 basis points on debit. The reason why people are paying 2 to 4% is because the cardholder has an incentive to earn cashback rewards or airline points. And so what you don't realize is that like you'd have to change that behavior to make stable coins more functional. Like at the end of the day, like someone who wants to buy a big screen TV and get 3% cash back or go out to dinner, like they don't care. And the merchant's paying that. And so like you can pay with a debit card.
That's a very uniquely American thing. Right.
Correct. But then internationally, as we just said, there are countries that have implemented digital payments. In India, they have it. It's not a decentralized blockchain, and it works perfectly well.
Yeah,
right. But the time of implementation on that was before this was in vogue, right? So now,
not really, but sure. I mean, directionally, it was like what in the late 2019, 2018. Like we had blockchain, we had stable coins. Tether was around.
I think there's something's going to happen. Like now, the crypto crew put so much money into this election, right? Getting Trump elected, and also a lot of representatives and senators elected using lobbyists. Something's coming. right? With regulation as it relates to crypto, something big is going to happen. And I can just see it be, I mean, Trump's like launching his own coin. Melania Trump's got her own coin. I mean, like, you can like it or not like it. I would say this, like when you got, and then his sons have their own like crypto company too. Like they're in. So like something's coming. I just like as an investor, I'm like, where is the opportunity? Like if there's an opportunity here for like private companies, I'm like super intrigued in this because this is like payments, securities, transactions. I mean, there is a lot of money being transacted, trillions of dollars a year, right?
And thematically, I think that's the important part. So when you bring up the idea of payments, you bring up the idea of tokenized assets, and anyone that was previously uncomfortable by crypto, whether you like it or not, the level of comfort is probably starting to come around because these things that we do every day, such as payments or investments, are now like, oh, but it's all on that same sort of idea or ideology, like in the backdrop of blockchain, right?
100%.
So blockchain enabled. Now I'm a little more comfortable with that. So, but it's how do you change habits? So if you live half your time in Spain and half of your time in the U.S., you probably sit on a whole lot of euros and a whole lot of dollars, right?
Right.
Mm-hmm.
And maybe this is the sort of case. It's like, it doesn't really matter what country I live in. My second currency is going to be Ethereum or Bitcoin or whatever it might be, or a basket of various other currencies. So it could be something that people are going to just get more and more comfortable with, particularly if it's promoted from within the new administration. And maybe this is the next 3 years and 11 months, who knows? But it's
something's coming here. Like these crypto guys are going to get what they always asked for. They're going to get clarity on where they can start and stop. I think a lot of incumbents are going to get into this space because they're basically going to say green light, like go, yes, Fidelity, you can offer all crypto coins, no problem. JP Morgan, same for you guys, right? Like all the banks is going to be good. Like they're talking about putting Bitcoin on the Treasury's balance sheet. That means the banks can do that too. I mean, like this is going to be like everything that these guys wanted. I think they're going to get it now, right? So like that opens up an entire, like, crypto was a non-starter for me because of regulatory overhang. That regulatory overhang is gone or is about to be gone. And if anything, it's going to be the opposite now. It's going to be like regulatory support for this. And that's going to open up a whole bunch of opportunities, I think. And it won't be coin. What I'm interested in is not coins.
But Dogecoin and Bitcoin were both on the balance sheet at Tesla, right?
No. But like, I'm not interested. I'm not really interested in the coins or the like the in customer stuff. I'm more interested in all that stuff that happens in the middle. Security, like Evan was talking about chargebacks. Like someone's going to solve for that, right? Lending, right? And balance sheet solutions around lending, and then just like general connectivity into the chain and all that stuff. Like there's going to be some really interesting businesses that I don't think will be incumbents. Right, that will need to be like stood up or exist today. That I think that's where it's going to be like a really interesting,
I think lending solutions, unlocking value on highly appreciated assets is a natural big one for incumbents to step in. Otherwise, you got to think of them from the assets themselves. Like I don't think you're not going to have the benefit of these things as the assets themselves, and in particular the platforms, right? So if you look at like what was Trump and Melania coin launched on, well, that was launched on Solana. So you got to look at the network themselves. And I think that's where the value lies most of the time as it relates to these crypto assets. I think you're going to have incumbents on lending, so traditional financial service overlays onto this new era, this new financial infrastructure. And I think you are going to have tokenizing companies. I've actually seen a few recently that have blown my mind using tech for authentication with your facial recognition, like just wild tokenization platforms. They're not tokenizing things inefficiently either. They're taking, a private credit fund in, and they're tokenizing the private credit fund. So they're starting this alt platform for all kinds of different funds, and they're just tokenizing funds. And I think that's a great way because it's easy for them to stand up these contracts. Everything's kind of pretty, similar. They're learning the whole time. They're leveraging AI to just speed up their development processes, and they're really coming to market pretty quick. So I see a lot of those coming up, and those to me seem like attractive opportunities potentially. But ultimately, I see it in the assets themselves, and I think that's going to be the clear winner.
Yeah, well, this is going to be big. I'm telling you, I'm like starting to become very risk on with this because I think we're going to see like some institutionalized moves. Like something's going to happen in the next 4 years. Will like lock in, right? Something with crypto will lock in, and then there'll be like an ecosystem that will develop around that. And there's going to be a ton of investment opportunities, I think, in that space. But all right, let's hit this last thing. 10 minutes. I promised Nick we'd be done in 45. Nick, I'm going to maybe two or 3 minutes late today. All right, so data centers. Everybody's got billions of dollars for data centers. Okay? This is the year of the data center, 2025. Microsoft's got 80 billion, right? That clip with their CEO on CNBC was hilarious. He's like, I don't know about everybody else, but I'm in for 80 billion, right? So that was great. Zuckerberg came out 60 billion for Meta, okay? And then, of course, Trump with Masayoshi Son and Sam Altman and and Oracle, like $100 billion out of Stargate, they're calling it, right? Which
500 billion.
Well, but 100 billion. My
total.
understanding was 100 billion in 2025, right?
Yeah.
500 billion total. So like here it is. Like my question was like, do we really need all this compute? It sounds like
yes.
Okay,
Oh,
so
yeah.
go ahead, Clint.
We need 60 gigawatts of electricity by 2030. That's 127. That alone $660 billion that you're going to need to spend on the infrastructure. You need $2 trillion by 2030, which is probably a conservative estimate in terms of data center spend, infrastructure spend, and more importantly, the energy around these data centers. See, what a lot of people don't realize, I was talking to an industrial real estate firm that we partner with. There are certain markets now, just because of electricity issues, where you don't have the power usage you need. So the sites that are available for these data centers, that supply is getting smaller and smaller and smaller. And until you have massive infrastructure investment, you're not going to get that. And you're going to run into a massive bottleneck from a compute perspective. The answer is yes, we need compute. We need all the compute we can get. We need to get it as cheap as possible. But the problem is, will the real asset supply be opened up enough for us to get that compute in order to scale in an efficient manner? And I don't know that answer yet. We're running into issues already. We need a lot of money poured into this.
So we've had violent head nods from everybody on like, do we really need all this compute? So like, maybe I'll ask you, like Nick, maybe I'll ask you this. Do you think how long is this trend going to persist? Right? Because we're all like stock investors here. So like the party will only keep going until like this, like, well, maybe we don't really need any more incremental compute. And then like stock prices will, like Clint mentioned earlier. So like, do you think this is like a 5-year thing? Is it a 10-year thing? Is it just going to be like, hey, Microsoft's going to spend $80 billion a year in perpetuity for compute because it's just going to keep going? Like, we're just going to keep needing more. Like, where does it end?
Sure. So I'd love to have this just stitched into the context of the broader podcast this week. So we started with DeepSeek. The cost of their model was well reduced.
Right.
And then the idea that we were talking about there was like, oh, that's great. We're just going to find other ways to use it because it's cheaper now.
Right.
I think that Clint was bang on in that point, whatever that was, a half an hour ago, if you want to stitch it together. And I kind of feel like the model might be shifting on its head where it will be cheaper. We will still want it, but I mean the ability or requirement for these massive like farms, with so much energy use actually might not be as profound as we might all think. So at CES Las Vegas, Jensen Huang came out with a supercomputer box, and it was for anyone that remembers like the Apple TV from 10 years ago and how small that was, and everyone was like, yeah, cool, but what do we do with it? I mean, this thing is its own mini powerhouse, and I think, Evan, you mentioned the Blackwell chip. I think it has that in there. So we could take that in-house at our own company and start to run our computations through that. So maybe the idea of what we have in our head for like what what data centers might even look like is going to be very, very different in the future too. But data runs everything, and that the amount of data created every single year is so much larger than every year that ever came before it.
Right.
Yeah, I don't think it's just merely a 5-year trend, but honestly, it could start to level out after a 5 or a 10 year, and you start to see these super, super long-term cycles like the boom of the internet, and then it came back down, and now we're having the boom of AI, and then, there has to be an end to that. That's not going to be a perpetual thing. But I don't think it's a short-term thing, and short-term for me might just be like 5 years, right?
Yeah, right. So Evan, clean us up here, man. What do you think about this trend? Like, where do you think it's going?
I mean, I agree with both the points that Nick and Clint made. I think that in a lot of ways, I feel there's no doubt that we need to do more investment. There's no doubt that we need more energy production so that we can scale with the ability of the abilities of AI. I think that at the end of the day, our risk is really, it's our risk. Like, as a society, as an American civilization, like, can we get labor costs and regulations to be low, like open enough to make these things possible? Because I believe that China has got like 100 nuclear plants going online in the next 5 years or something like that. And we are well behind the 8 ball on the ability to produce energy. And we have a very old legacy electricity infrastructure.
Right.
Now on the data side, I think it's interesting because while, to Nick's point, data just infinitely will grow, right? Like I always think about the photos, like, every year there's more photos taken like by like a magnitude than the year before because the cost of taking a photo and storing a photo is zero. But in relation, there's also been, compression technology that has made the files of a photo much lower. And now you can store more and more files for less and less space. So I think that you're going to need some innovation, which is where some of that money will go to. There's obviously the infrastructure, which is the data center part, which need to become energy efficient. They need to be properly insulated. They need to be constructed inexpensively, operated inexpensively, and they will be commoditized. So that's the challenge. Whereas like at the end of the day, the costs will drive down. So if you're investing, you got to be careful because at the end of the day, you don't want to be investing in a total commodity where the costs are zero and you're competing. But I do think like in the near term between 2025 and 2030, we're going to definitely need a lot more to keep up in the AI space race. And then once we hit this plateau, we'll see what happens. Kind of reminds me of, the Cisco and the fiber build-outs of 99. And we're like, well, we just ended up building it on cable and it turned out we didn't need all that fiber and everything just crashed. So you got to kind of figure out which of these narratives this is going to be. I think it's much more likely to not be the fiber narrative and much more likely to be this is an absolutely game-changing technology, more like the cloud computing business.
Yeah. I don't know if I'm as bullish as everyone else on this, and like if the trend persists on the spend. I like, to me, I agree with everyone that we're going to see like exponential amounts of compute needed. I just think it's like it's kind of like what we've all been saying. I think it's like, well, maybe I shouldn't say I disagree. Like people will find ways to make this more efficient, right? Like there's already people talking about putting data centers in space, because it's cool. It's less energy to cool them off, because obviously space is very cold. And then also you can use solar panels to power the data center, right? And if SpaceX can let you send stuff up and Starship lets you send stuff up really inexpensively, build the data centers in space, right? So like people are going to find ways to, that's maybe an extreme, silly example, but they're going to find ways to optimize, right?
Couple that with the size of the box that I'm talking about, and there's no reason why that wouldn't be the case. And then when you think about global warfare and the idea that these undersea cables are getting cut now, and countries are going offline, maybe space is the next frontier for safety of kind of
connectivity,
getting
connectivity there until people start shooting down satellites, which is not far off either. So
I just like there's going to be something that will happen, where I don't see this being like, there's no way this much money goes into this type of a thing forever, right? Like they're just like with data centers, like cloud providers, right? There's like a per unit business model now that works. They found ways to optimize and drive down cost. Like when Google Drive 15 years ago used to hit me up for X amount of dollars for X amount of data space. Now that's gone up like tenfold, right? And I pay the same price. So like something's going to happen to the same extent, you know,
It's going to be the chips.
The chips.
It's going to be the chips. It's always the chips. And we're going to continue to pour money into more efficient
semiconductors.
Chips. Yeah. That's, if you think about the evolution of compute, the evolution
Clint, the margin's going to be the same, you think, on those chips? Like, is NVIDIA going to be able to claim the same margin? You think they will?
I think margins are sustainable. I don't know from the peak value, but I think if you look at a 5-year average, I think margins are sustainable.
All right, interesting.
I also think it's high bandwidth memory as less than GPU.
Okay.
I think that's where which is actually much more commoditized over time.
Well, I will say this. It sounds like people need to get very smart. So if you're not very smart on data centers and chips and electricity, like all this infrastructure stuff, right, that Clint mentioned earlier, like you got to get smart on this because it seems like it's going to be a persistent component of all things in business, right? You know, your like ROI model will be like, well, what chip are you using? What data center you get? What expenses your electricity? You know, and that's going to be primary drivers to like profit and margin. For businesses. So
well, your data center is just another water company or a power plant now.
A commoditized utility.
Yeah, same thing.
Is it going to be subsidized though? Is it going to be government subsidized like those?
I could see it eventually. It takes a crisis for that typically.
Yeah.
It's going to be fun though. This is all right. Good conversation today, fellas. I appreciate it. And I'm glad we got the first one in the books, 2025 with all four of us. So that's awesome, man. I appreciate you guys. All right. So, all right, man. Have a good week. All right.